Wall Street started the second half of the year on a positive note after the worst half in decades, with the Dow and S&P each rising more than 1% and the Nasdaq climbing nearly 1%. Economic data released Friday appeared to back the view that the economy is cooling and that inflation may be past its peak, raising the possibility that the Federal Reserve may not have to be as aggressive as some investors feared. Scott Wren is senior market strategist at Wells Fargo's Investment Institute.
I think today's ISM numbers, they dropped, they're lower. The employment component of that was in the contraction zone. So I think the market's trying to sort out whether good economic news is actually good for the market. Good economic news probably means the Fed, has to be at least as aggressive as what they've told us. Where bad economic news, some people might hope that means the Fed doesn't need to be as aggressive.
Shares of market leaders Apple, Microsoft, and Amazon all rose Friday, providing the biggest boost to the S&P 500 and Nasdaq. Facebook owner Meta Platforms ended lower after CEO Mark Zuckerberg told employees the company cut plans to hire engineers by at least 30% this year and warned them to brace for a deep economic downturn. Kohl's tumbled nearly 20% as the department store chain called off its sale to Franchise Group following months of negotiations. And Micron Technology dropped about 3% as the chipmaker predicted quarterly revenue below market expectations, triggering concerns the chip sector was turning toward a down cycle.